Good morning and welcome to IG's early morning call on Monday, the 19th of February. I'm Angela Barnes. Coming up on today's programme, well, some central bank action. China is expected to stay put on the loan prime rate tomorrow, while the Reserve Bank of Australia and the Federal Open Market Committee minutes are also due this week. Also, in the UK banking sector, investors will be keeping across Barclays, HSBC, Lloyds Banking Group, all forecast to post strong full-year earnings, but outlooks will be key. And in US earnings, Walmart kicks off on Tuesday, and then Nvidia earnings on Wednesday. Well, let's start by taking a look at volatility this morning, a look at the VIX chart. And well, since Tuesday, the 13th of February, you can see volatility has decreased. And since Friday, however, volatility has increased slightly and is currently higher on the day, just very marginally up there, 0.07%. And with 30 minutes to go until the European markets open, this is how things are looking pre-market across Europe. Well, the FTSE 100 set for a lower open at the moment, down 0.16%. France's CAC 40, the same, also due to open in the red, currently down 0.25%. And Germany's DAX also set to follow that trend, down 0.25% as well at the moment pre-market. Well, on Friday, European markets closed on a positive note, however, with the FTSE 100 rising as data showed UK shoppers returned to the high street in January. The FTSE was led by miners. It was led by Glencore, Anglo American and Antofagasta as well. On Thursday, data showed the UK had fallen into a recession in the third quarter. Strong retail sales, though, may signal that that could be short-lived. Well, UK banks, miners, aerospace firm Rolls-Royce all release full-year figures this week. We'll be keeping across those. But let's have a look at how things were looking in Asia-Pacific markets overnight. And this was how things were. The Nikkei 225 down 0.04%. Hong Kong's Hang Seng down 0.77%, and Australia's S&P ASX 200 up marginally, though 0.09%. Well, stock markets in China rose as traders returned from a long holiday. As you can see, Hong Kong stocks fell. The People's Bank of China on Sunday had a key policy rate steady as expected. We'll have more on that in a moment. I'm just going to show you the Nintendo chart here as well, because meanwhile, shares of Japan-based video game company Nintendo dropped. You can see 5.84% on unverified reports that its next console's launch may be delayed to early next year. Meanwhile, let's have a look at how Wall Street closed on Friday. This was the picture. The Dow Jones Industrial Average down 0.37%. S&P 500 also down nearly 0.5048% there. And the tech-heavy Nasdaq Composite also closed in the red, down 0.82%. Well, stocks slipped Friday to send Wall Street to a rare losing week, just its second in the last 16. A report on inflation sparked fears that interest rate cuts from the Federal Reserve may not arrive until later than expected this year. They were hoping for, the markets were anticipating something in March, but that might not be till May now. Well, US stock markets will remain closed today as the country celebrates Washington's birthday. No trade for stocks, but you can still trade US indices on the IG platform. Now, let's have a look as well. So China, let's talk about that, because yesterday, the People's Bank of China kept the rate of its medium-term lending facility at 2.5%. In its statement, the People's Bank of China said it sought to maintain banking system liquidity reasonably ample, particularly after the week-long Lunar New Year holiday. Well, if we look at the US dollar Chinese yuan price chart, well, the pair currently lower on the day, just 0.02% in the red. Declining as well since Wednesday, falling further since that announcement yesterday. Well, US minutes this week will be closely watched for the dollar reaction. The dollar under pressure with market sentiment leaning towards the anticipation of a Fed rate cut at the upcoming March meeting. However, the chair of the Fed has said it's unlikely to happen in March, as earlier just noted. But tomorrow, China loan prime rates are expected to also remain unchanged. The one-year loan prime rate used for corporate and household loans should stay at 3.45% for a fifth straight month, while the 5-year rate, the reference for mortgages, is likely to remain at 4.2% for the seventh month in a row. Well, more from other central banks this week, and tomorrow we have RBA minutes. Well, earlier this month, the Reserve Bank of Australia kept its official cash rate on hold at 4.35%, noting that higher interest rates were working to reduce inflation. On Wednesday, traders will look in Federal Open Market Committee minutes for any indication on when US policymakers intend to start cutting rates after last Friday's US PPI, which showed their biggest growth since August. A rate cut in March seems even more unlikely. Meanwhile, Rightmove house price index, well, that has shown the first rise in 6 months in annual terms as demand from buyers has strengthened. Well, asking prices for homes rose 0.1% in February. That's compared to a year earlier, the first annual increase since August 2023. Well, prices increased by 0.9% from January. And in other news, let's have a look at Money Supermarket. Well, look out for its share price this morning at the open. The group posted a net income of £72.3 million for the full year. Revenue is marginally better than forecast, coming in at £432.1 million. Also, watch out for Currys' share price this morning. Shares could react to the news that Elliott Advisors has confirmed it is considering a possible new offer for the retailer. Well, the news was first unveiled by The Times yesterday. On Saturday, Currys received a 62 pence per share offer from Elliott Advisor, valuing the company at £700 million. An offer rebuffed by Currys, though. As of Friday, Currys' market capitalisation was £533 million. In other news as well, let's have a look at what UK earnings we can expect this week. Well, that's after NatWest reported its largest yearly profit since 2007 last Friday. Other main UK banks report this week are expected to post similar performances this week as they benefited from higher borrowing costs. So what can we expect? Well, Barclays will publish its annual report on Tuesday, followed by HSBC on Wednesday, Lloyds Banking Group on Thursday, and Standard Chartered on Friday. The market will be particularly attentive to their outlooks as interest rates could decline sometime this year. Well, outside the banking sector, Rio Tinto is due to post its annual earnings tomorrow and Rolls-Royce on Thursday. Well, for Rio Tinto, the focus will be on its final dividend. The miner is likely to hold back on additional shareholder returns as it readies its joint Simandou iron ore project in Guinea and an expansion at its Oyu copper mine in Mongolia. Well, as for Rolls-Royce, outlook will be key to retain investors. Some of them could be tempted to take profit after a stellar year, which saw Rolls-Royce share price rising 200%. And then let's have a look at what's on the cards for US earnings this week. Well, despite the challenges of rising inflation, Walmart has so far found a way of dealing with higher input costs and keeping competitive prices for its customers, which translated its earnings a beat in 3 out of the previous 4 quarters. Well, it's forecast to post earnings of $1.64 per share on revenue of over $170 billion tomorrow before markets open. This compares to earnings per share of $1.50 and revenue of $151.47 billion the same quarter a year ago. Analysts, however, predict an 11% increase in US e-commerce sales, which would be the slowest rate of growth in 2023. And if we look at the Walmart price chart here as well, shares are up 10% so far this year, and that's about double the S&P 500 performance. Also due tomorrow, Home Depot. The Street forecasts the home improvement retailer will post an 18% fall in earnings and a 4% decline in sales. Well, after the US close on Wednesday, all eyes will be as well on Nvidia. The Street anticipates earnings per share $4.58 and revenue of $20.37 billion for the same quarter last year. Nvidia posted earnings of 88 cents per share on revenue just over $6 billion. Well, if we just have a look at the price chart for Nvidia, just put it onto the 1-year chart, it's had a phenomenal rise that translated in gains over 220% over the past 12 months. Well, year to date, the stock has already risen by 50%. The development of AI means that businesses around the world have the opportunity to operate more efficiently and improve their market positions, and Nvidia products have now become essential to achieve these objectives. Nvidia's data center base, which comprises cloud and AI services, could see its revenue close to $17 billion, more than 4 times the amount reported a year ago. And meanwhile, let's have a quick look at commodities and see how oil prices are doing this morning. We'll start by taking a look at Brent. It's currently down on the day 0.76% at the moment, trading around $82 a barrel. And then if we just move over to US crude, WTI, also in the red, down 0.76%, trading around $77 a barrel this morning. Well, momentum has stalled over concerns that a rate cut in March could be delayed until May. As earlier mentioned, geopolitical events, though, continue to provide support to prices. However, the oil demand outlook for this year also remains uncertain after last week's IEA report forecast a slowdown in oil demand growth. And that's in contrast, though, to OPEC, which sees consumption growing by another 2.2 million barrels this year. Well, last Friday, the Baker Hughes weekly survey showed a decline of total rig count to 621 last week, decreased by 2 there. And then from 663 the previous one. And meanwhile, number of producing oil rigs fell to 497 from 499. And then let's have a quick look at gold this morning. If we pull up the chart, currently higher on the day, up 0.34%, trading back above that $2,000 level. Gold has more or less recovered the losses recorded last Tuesday when the precious metal fell to a 2-month low. And let's have a quick look at copper as well before we go. Also consolidating this morning after strong gains on Thursday and Friday, currently down 0.47%. Well, that's all we've got time for this morning on Early Morning Call. Thank you very much for watching. Do keep across all our social media platforms for updates and market analysis throughout the day. And tune in for Beat the Street this afternoon as well with Angeline Ong. Thanks very much for watching.